That's one of the biggest reasons that I had with options, is because scaling out and also trying stocks that are just way too expensive for me. Hey guys, it's Will. Welcome to the channel. I'm a part-time day trader trying to become a full-time. I took a trade a couple days ago. It was a really solid play. It was a really good trade. It could have been a really good trade, but I did not lock in my profits. I did not hold long enough, and I did almost break even, but I was able to sell out for a small profit. I was happy about the execution, but I was not happy where I got out. Was not happy about selling out. But first, I'll show you guys the live trade, and then I'll explain to you guys what happened. Right here is a 2-minute on the SPY, and it did break this 563 level. It did break, start retesting and breaking down. But normally I don't like taking a trade like this. It's not really breaking down a lot, but it is showing rejections. And I did have my QQQ level at 476, so I did not want to short it until that fully breaks. But you could take a short right here, and it did work out nicely. This right here aligned with the 476, and that's when I took my short position. And my target was the 559 on the SPY, but I did not get it. We can see later day though that it does get to the 559. Not exactly here, but it does get it over here. But that is later day. That is 1 hour later day, 2 hours. And depending on the day, I can't trade that long, so that's why I had to get out by then. If I have undersized, then I could hold to then, but I know that it always gets a bounce, and then eventually it could get there. And the problem I had back then for so many months was scaling out. I used to scale out a lot of my trades. I used to actually get more than one contract. I would normally get 2 contracts. The thing is, I never had the proper risk reward. I'll normally get out at 20% for my first scale, and then I'll get out probably for break even or a loss, because I would have lose a lot of trades. Or maybe if I did sell it for a profit, it'll be like 30-40%. It'll usually never be higher than that. It's because my risk to reward back then was just bad. I didn't really have a proper risk to reward, so I'll just get out whenever. And this is why scaling is good, is because you can hold a runner and you cannot even think about it if it goes against you. But the bad thing about me thinking about scaling out is that I had to get more size. I can't just get 2 contracts and risk less, because I had to buy more stuff, right? I had to buy more contracts, which that means I had to buy more money. I had to use more money. So I had to risk more. Sometimes I would buy 3 contracts. Sometimes I would buy 4 contracts. It's because I can scale out better. I can scale out 3/4 of my position. I can't get 2 contracts and scale out 3/4 because I only have 2 contracts. But if I have 4 contracts, I can scale out 3/4 and then I can hold 1 runner. But that means I had to use my money in total. And each contract would be about $1 or 50 cents, which that's about $50 or $100. And that's one of the biggest reasons why I say that options are harder, is because you can't just buy cheap options, because it's going to ruin your value. It's going to ruin the delta of the options. I had to buy it more in the money, and it is more expensive. And if I did do options with other stocks like Nvidia, Apple, then their options is a lot more expensive. That's why I said I had a lot of trouble, because my size was a lot higher. I wanted to trade Apple, I wanted to trade Nvidia, but the size was insane. Back then, Nvidia was like $1,000. Probably at the money or in the money would be around $1,000. And that's probably the best one you should get. And since my risk is not as high, I only spend like $100 on a contract. So I'll go all the way down out of the money, but then my delta is really bad. I really need a strong move for Nvidia to make me money. And if it goes against me, then I lose my value really quickly. That's one of the biggest reasons that I had with options, is because scaling out and also trying stocks that are just way too expensive for me. And that's when I switched to SPY and QQQ, because they're a lot cheaper. I'm allowed to get in the money or at the money. And then later I just decided to not even scale out. Is because what's the point of me scaling out 20% and then later knowing that it can go to the next supply or demand zone and then getting out. If I know that that's my target, then I can get out. I already got a 3-to-1 in my trade. If I do have small runner size in the future, which I would be, I'm going to have more contracts in the future, can actually scale up when it actually matters, because it could be a potential bounce zone. And if it does continue on further, then I can get a really good profit. But if it does bounce, then I just lose a little bit of my profits. But now I really know the power of scaling out and what it can really do for you. Here's the 2-minute on the QQQ. My levels on the Qs have changed a little bit. I did not have this demand zone from before, but I knew that 472 was a potential demand zone from back then. So this right here is the Tuesday that I took the trade. You can see the 472, it holds right here, and that it does hold over here. So I knew that it could be a potential demand zone, but I do play off the SPY as well. So I knew that the 559 would be a hold level, and until it reaches that level, then I'll get out. Here's the 2-minute charts that I look at: the Qs, the SPY, NASDAQ, and ES. I wait for it all to align, even though I saw the 563 break and do a retest. It was around this zone here. I did have a small level there, but I knew that I wanted to wait for the 476, and it did break, and then it started giving me a retest, and that's when I took my short position. Ignore this zone here because it wasn't there before, but I knew that it could get to this zone here on the NASDAQ. It could get to this zone on NASDAQ, and the ES and the SPY had more room to go. I believe that it was going to go there eventually. I don't have the time, I don't have the patience to wait that long. It's because I also have work. And once it started going up, I was like, maybe I have lost the trade. Maybe this potential demand zone from earlier could be the bounce, because I did have that level at the 473, so it could be a bounce, and that it could eventually get to this 559 level still, but I don't know how long it could take. Maybe it'll take the whole day. I was saying if I had runner size, I could have just scaled out over there and then later just wait for that, but I didn't. And if I do take out this short position calculator right here, put it at the risk where I got it, let's say 50 cents, and put it like right here, usually risk a little bit, tiny bit more, and I brought it all the way down to this zone right here. This would have been like a 4-to-1 zone that I got out. So it was already a really good trade. Why am I trying to hold out for this picture right here? Why am I trying to hold out for this zone to touch, or yeah, this 559? And I shouldn't have sold out unless it gets back above this zone right here. Like, it never actually got above the 476, so why am I selling? But you know, your psychology just gets really affected when you're up a lot and then you're back to break even, and or your mind just plays tricks with you. You think you're gonna lose a trade now, it's because you're going back to red, and it just really affects you. You know, there's a lot of psychology into trading. If I had runner size, then I can just chill. I know that I have more majority of my size right there gone, and I can just actually hold out. And you never know, this could have actually been a bounce and then get back above here, and then if I didn't sell out, I could have just lost the whole trade. Sometimes it can actually get really close to the level, like this right here, but never get back above, and you're holding your whole position there. It's really hard to not believe it's going to break up. So that's why when you sell majority of your contracts and you have runner size, you're not going to be scared, because you know that it's like a pie. You ate 9/10 of the pie and you has one left, and you're not really worried about that. You can just let it run. You can just chill. You can watch a movie, and if it hits your target, then it hits your target. If you lose, you just lose a small amount, which is nothing. But if you have your whole position there, you're going to be watching the market like crazy. That's why I was like, a lot of things were just going in my head that I sold out. Once it gave me that small bounce back to the downside, I was like, I'm just gonna sell out there. That is my recap of today's trade, just talking about my options and how scaling out can be really good for you, and that I need to work towards scaling out in the future. But first I had to get consistent first, and then once I'm able to increase my contract size, then I'll be able to scale out. And what I like to say is, how you do one thing is how you do everything. Keep staying disciplined, keep staying consistent, and let's just get 1% better every day, and I'll see you in the next one.